Hello, I'm Steve Skancke, Chief Economic Advisor at Keel, and I'm pleased to share our thoughts about how the most recent economic and geopolitical news is affecting U.S. financial markets. The most recent termination of the U.S.-Iran ceasefire is having a more muted impact on energy prices and financial markets than prior interruptions. Stock markets closed higher for the week through Thursday as senior U.S. officials suggested the recent attacks are simply the continuation of diplomacy through other means. Quarterly earnings reporting begins shortly, and analysts on average forecast S&P 500 earnings to increase 24% year over year, with tech companies being the primary leaders. Given big tech's heightened vulnerability to higher interest rates, earnings disappointments are likely to have a more pronounced impact on tech sector share prices. According to the just released minutes of the Fed's June 16 and 17 meetings, higher inflation has caused a broad-based shift among Fed FOMC members, and futures markets are already pricing in at least 0.25% rate increase by the end of the year. The outlook for global economic growth, however, remains positive. The U.S. and China are the principal GDP growth leaders, and both are benefiting from AI investment and manufacturing. A well-constructed, diversified investment portfolio should continue to perform well as we move through the current period of heightened uncertainty. If anyone has questions about their own portfolios, our Keel Point team is available to answer them.